Good morning, everyone, and welcome to Marketing Matters. I'm Sarah Touchstone, Landmark Title's social media marketing strategist and educator. I get the pleasure of bringing you guys Marketing Matters every Wednesday morning at 10 a.m. Arizona time. We are wrapping up our February home buyer series with different types of mortgages. We're talking today about the 4 big mortgages. Now, if you're a seasoned real estate agent, this will be a no-brainer for you. If you're a newer real estate agent, definitely pay close attention. These are going to be very simple comparisons. But even if you are a seasoned real estate agent, it's always good to go over the basics when it comes to the different types of mortgage types and how you can best prepare your homeowners. I think one of the great things about continuing your education, and I'm not just talking about CE classes, but just your real estate education in general, is that when we take classes like Marketing Matters, even if it's subjects you already know a lot about and in depth, it brings these ideas and these topics top of mind. And anytime that you're feeding into your real estate knowledge and these different tactics and ideas and even loan types are top of mind with you, you're going to be a better advocate and educate your clients better. That's why I love education so much. That's why I come on and do Marketing Matters with you guys every week, because education does matter. So let's dive into our topics today. All right, so understanding the different types of loans and why this matters. So it matters because different buyers qualify for different loans, and knowing which of these loans your buyers are going to qualify for is step number 1. Different types of loans affect the down payment and the interest rate, as well as the approval process too. So it is really important to know about all of those. And then it also, this knowledge helps realtors guide buyers into their best financing options. Typically, this is the first step, right, to home ownership. If you're lucky enough to work with people that are buying homes for cash, awesome. But the majority of homeowners are going to need some type of financing. And then understanding more about the loans that your buyers are qualifying for and utilizing, it's going to help smooth the transactions and lead to more closed deals. All right, let's talk just a little bit about the mortgage process too. Like I said, Marketing Matters is for everyone, veterans in the real estate industry, as well as newbies in the real estate industry. So a couple of terms during the mortgage process: pre-qualification. This is to assess the buyer's finances. The next one, loan application. This is when you submit the documents to the lender. Loan processing. Underwriters are going to review the file. Loan approval. Yay, conditions are met. And the loan is approved. And then closing is when the loan funds, the keys are handed over, and everything is coming up roses for your buyers. So once again, just understanding these processes is going to help you make that transaction go a little bit smoother. And once again, if you're a veteran in the real estate industry, it's great to review some of these things. Now, let's dive into the different types of loans, the 4 big loans that we're going to cover today. Now, if you have any questions, please, like I said, utilize the chat and question and answer window. However, I'm not a loan officer. I don't do mortgages. I just have the ability to be surrounded by a lot of fabulous people, and I've learned these things over the years, and I bring them to you. So any detailed questions that you have about any of these loans, I really recommend reaching out to your mortgage partner and asking them, opening up a line of conversation. First one we're going to talk about, conventional loans. So conventional loans, these are not backed by the government. These are typically one of the most common loans out there as well. They are best for buyers with a strong credit and a stable income. The credit requirement for conventional loans. Now, once again, I'm not mortgage. These are the stats that I have. So they may change over time, but a good credit score I know is required for a conventional loan, about a 620 or more. And then you need between 3 and 20% down payment for this. The pros of a conventional loan is that the lower the costs over time. So if this is going to be like a 30-year loan, you're going to be paying a little bit less. And it has some flexibility with loan terms. Some of the cons for this one are strict credit. You do have to have good credit to get this one, and you have to have, certain income requirements. So this applies to the population that is, maybe middle to upper class. You've got good credit, you make what is needed in your income for this conventional loan. Side note on conventional loans, if you put 20% or more down for your down payment, you do not need private mortgage insurance, PMI, on that. So this is one that a lot of people, if they have a huge chunk of money set aside for the down payment, a conventional loan can really reduce your monthly mortgage payments, especially if you have that 20% and you can get rid of that PMI. All right, the next one, FHA loans. Now, these are backed by the government, by the Federal Housing Administration, just like it says, that's what the acronym is for. These loans are ideal for first-time home buyers and people with a little bit lower credit scores. Typically, the requirements for the credit score are about 580 or above, and they only require 3.5% down. So if first, especially like I said, for first-time home buyers, if you can't come up with that, 20% to get rid of the PMI on a conventional loan, 3.5% down is a great option. Some of the pros for this, it's a lower down payment than conventional a lot of times, and it's easier to get approval. Cons on an FHA loan, you do need to pay mortgage insurance premiums, or MIP. This is required to cover this loan. So you can end up sometimes paying a little bit more on your monthly mortgage because of some of the requirements for this. All right, VA loans. VA loans, this is one that I love talking about all the time because I'm personally trying to educate myself because my son enrolls in the military next year, and I can't wait to utilize his VA loans with him, or for him to utilize his VA loans. It is backed by the U.S. Department of Veteran Affairs, VA loans, right, in the name. It's available to all military service members and veterans, which we talked a lot about veterans here on Marketing Matters because Maricopa County is the #2 area in the country for veterans to retire. So we have a very strong veteran presence here in Maricopa County. So it is really important to be educated about VA loans. The requirements for this, they need to be VA eligible. There is no minimum credit score. Now, some lenders are going to, try to make sure that, you have some type of credit score at all, but there is no minimum credit score to utilize this. You just really need to be a veteran. So it's really, basically all veterans qualify for VA loans. The pros of it too, there's no down payment, 0 down payment needed with a VA loan. There's no PMI with a VA loan, and the rates are typically very competitive. Cons of it, the VA funding fee, which typically can be rolled into the loan, but there are some fees associated with it. And we have found over the years, especially during the pandemic, that boom, that it was tougher for veterans to be competitive because a lot of people thought that VA loans weren't going to be as easy to process, or they might go with somebody that qualified for a conventional or an FHA loan over a VA loan because they thought that the process might be a little bit more lengthy. So for whatever reason, and it's not, guys, it's all good with VA loans. But I do remember during the pandemic, that was kind of a con, was that if you were using a VA loan, you might get outbid by somebody who just literally was using a different type of loan. So seems to be we've made it through that crazy time when there was bidding wars going everywhere. But that was one of the things that I did notice about VA during that time. And then last, but certainly not least, USDA loans. These are backed by the U.S. Department of Agriculture. This one is, I think, a little bit less utilized in our Phoenix area, just because it is one that, oh, got a comment about VA loans. I'm just checking the chat, guys. VA loans, you can be active military as well. Oh, FHA loans, a credit score is 580, and all you need is 10% down. Thanks, Hal. Appreciate those comments. All right, USDA loans. These are designated, they are backed by the US Department of Agriculture, and they are designated for rural, and it says suburban, but really this is for areas outside of city limits. So this is going to be for county areas. That's why it's rural. A lot of times you can find pockets of areas that are county and not city areas that it's kind of weird how it works. Sometimes you have just this little pocket that didn't want to incorporate into the city. So you'll end up with these pockets that are county. However, here in like our Maricopa area, you really have to get out pretty far, like Whitman type area, to qualify for these loans. Quick little, well, I'll sidebar my own personal story after I go over all the goodies. The requirements for this, you need to have a low or moderate income. This is designed to really assist people in rural and maybe lower income communities. And then the property has to be USDA eligible and in an area. So USDA actually has a website that you can go on and you can plug in the address and you can find out if that area is eligible. This loan has some tremendous pros with it as well. 0% down and lower mortgage insurance than some of the other loans. The cons, obviously, location and income restrictions. So even if you were trying to, buy a home out in Whitman and you make a decent income and living, you still might not qualify for this loan. Okay, sidebar story on this loan. I actually have personal experience with this loan. The first house that I bought in my 20s was in Louisiana, and we actually did qualify for this USDA loan. And that was actually a really cool experience. It takes a little bit of time to get through all the paperwork, but this was, the most obscure of all the loans. This was my loan, my personal loan for my first home that I bought in my 20s. So I know from personal experience, this is a great loan. I've had experience with conventional loans as well, FHA, and here in a couple of years, I'm gonna gain some experience with VA loans. So there really are a lot of things you need to consider when it comes to helping your buyers select the loan that works for them. And each buyer, it's going to be different. I mean, like I said, me personally, just in my life, I've had experience with multiple different loans. So let's look at the side-by-side comparison between the four big loans. So conventional, FHA, VA, and USDA. For the down payment, conventional, 3 to 20%, FHA, 3.5%, VA and USDA, nothing down. Credit scores with these, 620 plus for conventional, 580 plus for FHA. VA, it varies. Once again, it's kind of a lender specific thing. And USDA, you do need to have a good credit score for that, but a low income, of course. So 640 or so for the USDA loan. The key benefits to all of these loans: conventional, lower long-term costs. So if you're spreading it out over time, it's a lot cheaper than some of the others. FHA, easier approval for an FHA. Most people do qualify because remember, it is that slightly lower credit score as well. VA, no PMI, which is huge, and great rates. And then USDA, no down payment, which was amazing. When I got it myself, we had no down payment. We just had to pay closing costs. It was very affordable for a young 20-something-year-old with a couple of kids. All right. Common myths. This is a fun one. All right, because I know we hear these common myths all the time, right? I need 20% down to buy a home. False. Many loans, like conventional and FHA, you only, or veteran or USDA, some have 3 to no percent down. So make sure that you're having these conversations with your buyers, because they may have this idea that they need that 20%, but they really don't. All right, second myth. Only first-time home buyers can use FHA loans. Wrong. FHA is for anyone who qualifies. All right, VA loans take too long to close. This is the one. This is that we saw during the pandemic when there were bidding wars going on. A lot of sellers would say, no, I don't want to go with VA buyers because it's going to take too long to close. It doesn't, right? VA loans often close just as fast as conventional. Complete myth, and a lot of really well-deserving veterans missed out on homes during the bidding wars strictly because of this myth. And then last but certainly not least, USDA loans are only for farms, right? You think rural area, low income, you got to have, 40 acres and a mule to qualify for this. Absolutely not. Many suburban areas actually do qualify. Once again, it just is anything that's outside of city limits. I've even seen when I, like I said, when I bought my house in Louisiana, we were in the middle of the city. We were just in an unincorporated area. So it's really quick and easy using the USDA website to figure out if that area that you're looking at does qualify for these loans. Okay, a couple more things as we're wrapping up today. Helping buyers choose the right loan, right? This is why we're on today. This is exactly the topic that we are utilizing for our own marketing, is how do we help our buyers? So you can start by just asking these simple questions. One, how much do they have for a down payment? Once again, we've talked about today, it's sometimes a lot less for a down payment than you would think. What is their credit score? This one's going to be important, right? Because that's going to determine how they are going to be able to qualify for certain types of loans. We've also had some great webinars on about credit scores, how people can check their credit scores, improve their credit scores. I think just 2 weeks ago, we actually did talk about credit specifically here on Marketing Matters. So if you want the recording for that webinar, just reach out to your business development managers and we can get that to you as well. And then, are they eligible for a VA or USDA loan? Once again, if they're eligible, these are going to be the best loans for your clients out there. But there are requirements, pretty strict requirements for it, such as being a veteran or the rural area with a low income. And then, do they plan to stay in that home long term? This is going to be really important when it comes to whether you're doing, a 30-year, a 15-year, 10-year. There are variations to the length of time on these loans. So make sure you're asking those questions right off the bat. All right, guys, key takeaways. This was a short and sweet presentation today. There are the different types of loans. They are fairly simple, but once again, always good to get this information and top of mind, and it's going to help you out when you're having these conversations with your buyers. So key takeaways: different loans fit different buyers. FHA and VA loans are helpful with those with low or no down payments and or low credit scores. USDA loans are great for rural home buyers. I'm telling you guys, these are really, really great loans. They may not be applicable for a lot of us in the Maricopa area, but you will find little pockets. So use those if you've got buyers in those pockets. Conventional loans, they offer a lot of flexibility for strong borrowers. So we cannot discount how good conventional loans really can be if your buyers are the ones that qualify. And then as a realtor, you guys can help your buyers by guiding them on the right path for the right loan type. So if you guys have any questions, please let me know. Once again, I'll reiterate, I'm not in mortgage. I'm not a mortgage expert, but I get to be surrounded constantly by fabulous, fabulous people in our real estate industry. So if you have any questions, let me know, or reach out to your business develop or your mortgage officers and get that information directly from them. They are the experts when it comes to mortgages. And of course, remember guys, that you can always find a list of our classes. I'm going to be wrapping up our classes. What's coming up next on Marketing Matters. You can find it every week on our website as well. And I also send out emails for you guys every week regarding what our topic is going to be on Marketing Matters. You can also check it out on our social media. Okay, this was our February. We actually have a March series coming up. This one is going to be about utilizing AI. I thought I'd put that one in there, but maybe if we have a minute here at the end, I'll go find that flyer and pop it up there for you guys. All right. Then we also do have ChatGPT coming up tomorrow. I was gonna say next week. It is tomorrow. I will be up in the Prescott area. We're gonna be talking all about that ChatGPT. This is my favorite tool that I personally utilize for everything, not only real estate industry related, but also for everything, even in my personal life. It has made me so much better and efficient. I highly recommend, if you can't get to this class, please keep looking at our class schedule for ones that we have in the future. All right, then we've got a broker open coming up March 6th. This was coming up tomorrow, but it got bumped the date. So if you were planning to attend tomorrow, head out there on March 6th, the following week from 3 to 7 out in Gilbert. And then, of course, we've got our 2 home tours every single month. Third Thursdays is at 8:30 is our Moon Valley. And then this morning, 4th Wednesdays is our Biltmore Luxury. So hopefully you guys made it out for that. And of course, thank you guys to our business development management team. If you need a copy of the recordings, reach out to our team. They are amazing. Beth, Hannah, Keith, Michael, Patty, Renee, Raylan up in Prescott, who I get to go see tomorrow. This is your dream team for anything and everything marketing related. And of course, thank you to Landmark Title for allowing us to bring you great topics like we had here in February with home buying. Tune in. Let's see here. I'm going to escape real quickly, and I am going to pull up our flyer for next month's Marketing Matters. Yes, we've already got it all together. It is Spring into Success. I hope you guys can see it there. I'm going to be sending this out to my business development managers by the end of the week, and stay tuned and posted for email updates and social media posts regarding this amazing topic. We've got leveraging AI and data and marketing for more closings. We're going to freshen up your brand. We're going to hop on top of this spring surge. We're going to talk about local market trends, and we're going to talk about the follow-up beyond the sale. So it's going to be a great way to spring in. All right, guys, that is it for us. I hope that you all attend our March. It's been a fabulous February with you. I will see you all next week.